Welcome to the Zevin Asset Management webinar on shareholder engagement. I'm Sonia Kowal, President of Zevin Asset Management, and with me I have Marcela Panilla, our Director of Sustainable Investing. We are recording this session today so that folks who aren't able to make it can watch it later. And Marcela and I will start by having a conversation about our work, and then we'll open the floor up to questions. If you have questions before then, please put them in the chat so we can keep track. To respect your time, we are hoping to keep this to half an hour, about half in a conversation between myself and Marcela and half for Q&A. So Marcela, you and I talk about social justice almost every day. And we think about this as our responsibility for the stewardship of client assets. I know you recently recorded a video introducing the concept of shareholder advocacy, but for people who didn't get a chance to watch it, can you briefly explain what it is and why we think it's important?
Yes, and thank you for the introduction, Sonia. A pithy summary of that 3-minute introduction is where we're coming from. Public equity investors are in a unique position to influence how corporations behave. And investors engage companies in something called a dialogue or an engagement to understand how are they managing and mitigating their harm on society and their environment, how are they managing their ESG risks. And while there are plenty of win-win outcomes that we can get companies to do well by doing good, the reality is that companies lag in doing more than they are regulated to do. So shareholder advocacy brings the issues that are affecting front lines of society up to the management level. And that's what we do in shareholder advocacy, is we push a company to go further than it would otherwise to address ESG related risks and impacts. And finally, we punctuated this Shareholder 101 introduction with how clients are a central enabler of this work. In a very formal way, we use client shares to file shareholder resolutions. And I also shared a little bit more about what that involvement looks like and invited you to join us. So in short, that's shareholder advocacy. That's what I dedicate my full role to.
Thanks, Marcela. So we're not a huge firm. We're certainly not in the company's top 10 list of shareholders. So how do we get a big company's attention?
Yeah, lots of investors can be large, but their voice isn't as loud as ours at Zevin. And we do that in many ways, and we could talk about that in a bit. But how do we get a company's attention? First, we need to understand the company's business model, and that's something we do in the ESG integration process. When we engage a company, we're reaching out to them via letters or email to have a conversation, have a discussion, sometimes with more investors and stakeholders to get social change or environmental change on their agenda, on the board's agenda especially. When that doesn't work, we escalate our requests by submitting a shareholder proposal. And the shareholder proposal or resolution is what the board of directors will hear. Formerly, I would attend these meetings in person and present our ask to the company in person, but now that happens annually at a shareholder meeting. And shareholder resolutions are really the sharpest tool that we have to access management and the board of directors. So that's how we get the company's attention, but there's other ways that we get involved, and I can talk a little bit more about that, Sonia, regarding our involvement in public policy, whether it's letters to the SEC or to Congress pushing for more disclosure or better social outcomes. That gets their attention too sometimes.
Sure, that makes sense. And how does, at the end of the day, how does this work enhance shareholder value?
This is since the beginning of this industry in sustainable investing, which we have been involved in since at least 1997. Back then, there was a lot of concern that factoring in risks and impacts to society was going to narrow the companies that you could invest in, or there was a trade-off with doing well and doing good. And now we know that investment managers like us and other pioneers that integrate ESG issues into investments are not harming their portfolios. We are setting them up for long-term business success. So we are long-term investors. We hold on to companies for a really long time, which allows us to engage the company, get to know their management, their corporate behaviors, and so that they can know us too, we engage them year on year on a variety of issues as they come up. So that in short is the breadth of it, but what do you think, Sonia?
I think that companies, when they are taken to task for the issues that they need to pay more attention to, it makes them stronger at the end of the day. And we kind of see ourselves sometimes as a canary in the coal mine, and sometimes companies sees us that way, as talking and asking them about these issues before other market participants do. And we think that gives us a unique insight into companies, and that can be a really interesting investment edge.
Absolutely. If companies are managing just for meeting required policy disclosures and they're not looking out to what is happening at a global level or what investors like us are pushing for, they are merely reacting and not being proactive in addressing the big challenges that we have, and that not that they're coming in the horizon. Climate change impacts are here, and companies are scrambling to either transform their business or not. And that is what we're aiming for, is long-term sustainability in our portfolio.
And so what are the most urgent issues that you're working on now on our clients' behalf?
I think the three, if I have to name three major issues, it's racial justice, corporate climate, lobbying and political spending, and lobbying in general, and climate change writ large.
Okay, so tell me some stories about this. You know, you've put a lot of effort into the impact report that's in the chat. The link is in the chat. And it really describes in depth a lot of these engagements and highlights a few of them, but tell us some stories.
Yes, and going back to being long-term owners, I will highlight a couple of examples. Number one is Kroger is the largest grocery retailer in the United States. They employ about 500 million people. So they have been a long-term interest. There's been a long-term interest at Zevin to engage the company on a number of angles. So during COVID, as you all know, the inequities that exist in our society were really exposed, as we saw unequal access to vaccines, unequal access to benefits. Kroger employing a huge workforce at the front lines, what we came to call essential workers, did not have access to paid sick leave or paid family leave at the time. And these are important benefits that mean that if there was a COVID emergency, and you all can remember just practically every day, every hour, there was a new situation with our families or with colleagues. Kroger was receptive to our engagement to get them to adopt paid sick leave. At the more federal level, we also pushed for paid family leave, and not just during COVID times, indefinitely. We think a stronger workforce makes for a better business. And so we have engaged Kroger on this. So you all may know that there is a huge corporate activity around the acquisition of possible acquisition of Albertson. So this is going to make their combined workforce huge. So we have a call coming up with the company, as well as other investor members of other coalitions that we work with, like ICCR, joining in a call to ensure that Kroger is keeping worker rights as a priority and make sure that the voices of workers don't get left behind in this process. That's one example of something I'm working on now, but also going back over time and, connecting all the dots with Kroger on sustainability and worker outcomes. The next example is on Verizon, and we recently submitted a proposal asking for something called a racial equity audit. So a racial equity audit is basically looking at how a company's policies and practices affect racial equity and inclusion. For example, how they hire, how they make sure to retain the workers, BIPOC talent that gets hired, how do they retain them? How do they promote them? Do they promote people at the same rate? Those are the types of data points that we need to see from Verizon when it conducts a racial equity audit. We want to make sure that as we're talking about racial equity, that we're looking at how the company's own business model might be inequitable in the first place. So we're working very closely with management and the board to make sure that this audit is carried out in the highest standards that we can. I have a third one, Sonia. Do we have time to go into a third story?
Yes, we do.
And this one pertains to lobbying, which is, you all may know, a huge force, not just now in the midst of elections, but upcoming elections and really year round. The companies that lobby heavily and talk out of both sides of their mouths are the ones where we think the biggest risk lies. For example, Alphabet is a company that you all may have seen has a very strong brand when it comes to its climate change mitigation strategies around emissions, greenhouse gas emissions reduction, investments in renewable energy, and the like. If a company like Alphabet is also engaged in public policy where they might be conflicted in the outcomes that a third party like a trade association or another lobbying group has as their priority, they might be putting in jeopardy all of the work that they are doing, and not just from a reputational standpoint and a brand standpoint, but a real actual impact point where they might be misusing their resources by belonging to trade associations and other third parties that conduct their lobbying activities on their behalf. So we have lots of investors, big pension funds too, who are interested in seeing Alphabet, Google, disclose more about how it thinks about its lobbying activities and climate change. So we look with a very, very good microscope or magnifying lens how they're talking about it and if they're actually walking the talk or not. So that's another story that is under development now because it's an ongoing push for Alphabet to do the right thing and put its money where its mouth is.
And Marcella, you've been pretty humble. You didn't mention that when you filed the shareholder proposal that was just voted on in the spring, more than half of outside shareholders voted in favor for this disclosure from Alphabet. So it's something that more and more shareholders are really thinking about.
Thanks for that. We do play a role. And like I said, we are small in our assets, but we participate in so many different influential developments of frameworks and expectations so that we can all be asking for companies in the same voice, what do we want to see? That is one big dimension of shareholder advocacy, is that it's very collaborative and very stakeholder driven.
So just before we get to that point, because I think the stakeholders are really important, please feel free to put your questions in the chat. We will have time for live questions, but please feel free to just chat us and we can maybe answer them ahead of that. So you mentioned stakeholders. What role do our partners play in this advocacy work?
Yes, our partners, allies, consiglieres, they all form a huge part of how we develop our advocacy. So it begins with the ESG integration process, where we're looking at what are the risks that companies have and how are we managing that in our portfolio for long-term success. But we also look at impacts, and for the impacts, we go to the organizations that are working every day, every week, all year round on that issue, whether it's worker rights, whether it's community investments or community impacts to their economy, their environment, their workforce. We want to understand what is it that is being impacted and what role does the company need to play. Part of what we do is hearing these stakeholders, understanding fundamentally what is the impact that the company needs to be responsible for, because externalities affect the people and the planet, and our job is to translate that up to the board and management. So stakeholders form a really important part, and we often not just partner to exchange or to learn from them, but we also help with some capacity building or inputs on how to engage corporations in business speak, so to speak.
That makes sense. Fantastic. So there is a question from the chat that I think is important. In terms of impact measurement, how do we, what do we report to our clients and how do we measure our impact?
This is one of my favorite areas to continue to explore. And you'll see in our impact report that we're talking about our engagements and just the sheer number of engagements we had and what resolutions we filed and the outputs or outcomes of those resolutions. We want to go further to see, well, when a company adopts a policy, say it adopts a policy on disclosure of its lobbying activities, or it adopts a policy for reporting on the diversity of their workforce. If we don't follow up on that, we won't really know if the company made a change. And why is this change important? We ask for disclosure, not just for our benefit, but for all investors' benefit, stakeholders who also want to see, well, how many women, men, and people of color are there in the workforce, and where are those inequities pointing to? So that's a very important area for us.
Yeah, and we also update our stakeholders quarterly through our impact update that Marcela puts together, and we send that out to our mailing list and we put it on our social media as well as our website. So if you're not on our mailing list, please email us through our website and we can easily put you on.
Yes, one more area to highlight around impact, and there's a lot more to say around the frameworks that exist out there that I want to touch on briefly. But I wanted to mention the Real Impact Tracker, and a few issues ago in our impact report, we talk about the Real Impact Tracker's methodology and their assessment of us against other funds that also label themselves as sustainable. These types of impact measurements are not just, what was the outcome of a resolution, although that is a very good signal to give to companies. If a majority of shareholders want a change, then the company should consider that a binding agreement, which at the moment it is not. But shareholders work with investors like us to drive the issue forward, and that is what is getting tracked by the Real Impact Tracker. How much do we go beyond the status quo of business to push them. And so what does that result in? How much do we talk in the industry and beyond the industry about the importance of impact in our investments and not merely managing our risk or screening? So I think it's a very important area. I invite you to look at the Real Impact Tracker because their methodology has many more criteria that they judged us on, but mainly it was, are you doing this authentically or not? When you talk about ESG integration, are you just looking at the ratings? And I think there was a question about ratings here too, but are you just using ratings to form a portfolio and then it's hands off, or do you vote your proxies according to what you believe the investment philosophy is? And also, do we engage outside of, like I said, in public policy or outside of our industry to push for systematic change? All of that made us standouts against funds that call themselves sustainable, but are not going beyond just the minimum.
So that's a great example of impact washing versus authenticity. So how do you take a step back and do the same analysis for the companies that we invest in, given, greenwashing? So that's a company, or one of the questions in the chat. How do you discern meaningful actions by corporations versus just greenwashing and pretend?
That's a great question, and related to the previous one too. This takes work. The looking into a company, unpacking a business model with sometimes members of the investment committee to see, okay, what is the company disclosing and how is it actually performing against what it discloses? ESG ratings typically look at, does it disclose this or not? We look at, okay, we all need that disclosure, but what changes are being brought about from actual implementation of these policies? So if a company is championing Black Lives Matter and racial equity issues, and we all saw perhaps in headlines that many companies stood up to make pledges. Well, how, years later now, 2 years in, how have they performed on those pledges to support communities of color, to look at their products and services and make sure that they're not discriminating based on their products and services? We own a company called TransUnion in our portfolio, and you're all familiar with the big three credit scoring companies. At the fundamental level, we are asking TransUnion, well, how do you score individuals to integrate the fact that there are inherent disadvantages from where we all begin? And so that equity question comes into play through how they behave. So the work in telling greenwashing from authenticity is paying close attention and seeing what are they changing beyond what they already would or say they would. How are they fulfilling those pledges and those commitments? Did they hire Black and brown people, or perhaps a lot more women? Did those people stay? That's an inclusion metric. So we use a combination of data and engagement to really drill down into these issues, because ultimately, if Zevin Asset Management and others talk about impact, we want to back up how deep we go to really find that evidence.
Thanks, Marcela. So let's open it up for direct questions. We can stop the recording now and then have people ask Marcela questions.